Today, I would like to discuss the illicit practice of short sellers lending out your AMC shares to cover their failures to deliver, FTDs, and the fact that they openly acknowledge this. They engage in such activities because they know that the Securities and Exchange Commission, SEC, lacks adequate funding and is influenced by bribes, making it unlikely for them to take action against the repeated rehypothecation of these shares. Hey, welcome to AMC Daily. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads, and also enter our giveaway. But everyone remember, this is not a financial advice video. Travis Tweet has mentioned that Virtue, a company, can receive stocks as collateral and use them to replenish other market makers' stocks, which can then be repledged repeatedly. Essentially, this means that they can continuously loan out the stocks received as collateral from borrowers to facilitate securities lending transactions for short sellers or to cover their FTDs. According to page 13 of Virtue's 10 Key, the company is authorized to sell or replenish stocks received as collateral and utilize them in stock lending transactions or deliver them to counterparties or clearing organizations to cover short positions or FTDs. Consequently, they can sell or replenish stocks received as collateral. By replenishing these stocks with another market maker as collateral, that second market maker can repeat this process multiple times. This is how they manage to satisfy their FTD obligations and continually defer addressing the issue. Travis also tweeted that Virtue engages in various transactions involving derivatives, such as swaps, which are utilized in trading activities. Futures and forward contracts allow for delayed delivery of the underlying assets. This strategy enables them to take additional short positions through swaps and forward contracts, effectively postponing the borrowing or delivery of actual shares. In March 2005, the Senate Banking Committee confronted the then SEC chairman, William Donaldson, with the case of Frank DeBrookie's company, a real estate holding company called Global Links. An investor named Robert Simpson sought to demonstrate that small companies were frequently targeted by abusive naked short sellers. Simpson purchased $5,000 worth of stock in Global Links, which gave him ownership of all 1.1 million shares in the market. There were no shares available to be borrowed, yet over 50 million shares were traded within 2 days. Clearly, this situation requires attention. I was astonished when I bought 1,282,050 shares, equivalent to 111% of the total outstanding shares. This individual purchased 1.2 million shares, surpassing 112% of the available float. However, 2 days later, over 50 million shares were traded. In theory, there should have been 0 shares available or even a negative 100,000 shares, but the float was still traded around 50 times its size within 2 days. This indicates that a small pool of 1 or 2 shares must have been repeatedly traded back and forth 50 million times. These shares were evidently used repeatedly to meet the closeout requirements and resolve FTDs. Interestingly, prominent mainstream media outlets like Forbes have claimed that synthetic shorting is non-existent. Unusual Wells shared a tweet highlighting a real Forbes article that downplayed the existence of naked short selling. However, on June 12, the SEC charged investment advisor Savvy Management, LLC, and its managing partner How B Mints with fraud related to naked short selling. This practice is not limited to 2005. It continues to occur even today, as recent as 2 weeks ago. The reason it persists is that we are being openly robbed in the stock market, and the SEC does nothing to combat synthetic short selling. Wall Street Apes tweeted that we are being openly robbed, and the head of the SEC, Gary Gensler, acknowledged that the system does not fully serve the American public. Gensler admits that he is unable to fix the system because large financial institutions lobby Congress. Jon Stewart also mentioned that the apes have exposed a way to uncover corruption through crowdsourcing. We the Apes and Jon Stewart on his podcast have shed light on this issue. which is now being properly investigated and exposed by James O'Keefe. It seems that the shorts are growing increasingly fearful of the exposure we have brought to the subject. They know that their actions will be revealed, leading to their downfall. Therefore, they are attempting to publish more articles to discredit the idea of synthetic shorting as a myth. However, the SEC is now working against the mainstream media, publicly exposing synthetic shorting for everyone to see. It appears that the shorts are becoming even more frightened because timing is crucial. Spence tweeted that Adamaron is about to pay off old bondholders who are likely shorting AMC. This could signify a massive legacy short covering event, coinciding with the payment of the July 2023 AMC callable bonds. If such a massive legacy short covering occurs, it could potentially trigger an AMC short squeeze. It will be intriguing to see if these callable bonds serve as a catalyst or the catalyst for the AMC squeeze. Mr. David Neos suggested that if a squeeze does happen, it might resemble the chart for Berkshire Hathaway stock in the early 90s. Back then, Berkshire Hathaway traded at around $290 per share, and over the years, it increased significantly to around $500,000 per share. Although AMC's bottom price was considerably lower than $290 per share, it indicates that AMC has the potential to reach $5,000 to $10,000 per share. If we divide $290 by 100, we get $2.90, which is approximately AMC's lowest price. Dividing $500,000 by the same 100 gives us $5,400 per share. Personally, I believe that achieving $5,000 per share for AMC would be a satisfactory squeeze price. Over the past 2 years, I have also been accumulating AMC shares. Previously, I may have aimed for $50,000 per share as my squeeze target, but now I consider $5,000 satisfactory. Each individual should determine their own squeeze target, and no one should influence or persuade you regarding your target. The fact that stocks can reach $500,000 per share demonstrates that an AMC squeeze is reasonable and achievable. Guys, that's all we have for you today. What is your opinion about AMC stock? Get involved and let us know in the comments down below. Thank you for watching.